$161,500 credit limit. Welcome to the Credit Plug channel. If you haven't already, make sure you hit that like button as well as smash the subscribe button. Also, as a reminder to all viewers and subscribers, this is not financial advice. This is for informational purposes only. Now, in today's video, I'm going to be walking you through a game-changing fintech where you can get up to $250,000 instant approval on a line of credit that you could withdraw the money directly into your bank account. Now, we're talking about the Aven Visa. So the Aven Visa is a credit card. It's more like a line of credit, actually, that allows you to tap into your home equity. There's rates from 7.49 to 14.99% variable APR. You get 2% unlimited cash back, limits up to $250,000, and you can get approved in as fast as 15 minutes. Now, this is a game changer. This is kind of like a home equity line of credit, but it's a little bit different, right? So we'll go over some of the similarities, some of the differences, and I'm gonna be walking you through the actual application process to share with you how to get approved. And the best part about it, getting your offer will not affect your credit score. So you can get instantly approved with no impact to your credit score. If you do wind up accepting the offer, at that point, it will be a hard credit check. Aven offers flexible repayment options. You only pay for what you use, and you can make payments like a regular credit card, a minimum of 1% of the statement balance plus interest. Or for cash outs, you can also have the option for fixed monthly payments in Aven Simple Loan. One of the other advantages is that you could get started with $0. Now, typical home equity products can cost thousands of dollars to originate on top of a weeks-long process, starting at $0 to get the card as fast as 15 minutes. There's no origination fee, no annual fee, no appraisal fee, notary fee, or prepayment fee. So this is actually very beneficial because, as a lot of you guys know who've gone through real estate transactions, you do have to get an appraisal when you're getting a regular mortgage, or if you're getting a home equity loan or a line of credit. The lender has to do an appraisal to see what the value of the home is so that they can decide how much of a loan you qualify for based off of a certain loan to value. Now, I'm gonna walk you guys through the exact process on how to get approved. So the first step is you want to enter in your mobile phone number. So the first question they ask is, what are you looking to do? So either home improvement, balance transfer, or other. So you could just select other, and then they're going to ask you, what's the max amount that you need? And so you could always go with the max amount. If they can't approve you for the max amount, then they'll just counter you at whatever they're going to approve you for. So it doesn't really matter. You might as well shoot for the moon. So the next steps is that they're going to do a soft pull on your credit, and you're going to enter some basic information: first name, last name, email, last four of your social, your date of birth, and whether you're married, unmarried, separated, the address of the property. And another important thing that they verify is if the address is on your ID, pay stub, or taxes. And the reason why is because on the back end, they're doing a lot of verifications, such as your income, such as your identity, and to see if you're actually on title for the property that you list right here. So that's a couple of things that they check on the back end. Are you an actual owner? And they're able to verify your income as well as how much annual income that you have through your taxes and through your pay stubs. So you could apply jointly or as an individual. So again, if you apply as an individual, you don't have to put a spouse or whoever may own the property with you. So you could just apply as an individual. Now, after you submit some additional income information, you may receive an offer, and they'll send you an email that looks similar to this. So right here, it says, congrats on your Aven offer. View your offer by clicking this button. So we're just going to click the button. Wow. So 161,500 variable APR, 9.49%. All right. So as y'all can see, I was approved for $161,500, 9.49% APR, 2% cash back. Now, what you don't see in this is that, and I can't recreate this because I initially went through it on my cell phone, but they give you an option of either 25K or whatever you qualify that might be higher. So for me, my two options were 25,000 with zero fees, or 161,500. But as it says right here, there's a one-time county recording cost that's added to the balance and billed as 12 interest-free monthly payments of $119.78. So if you opt for just the $25,000 offer, and again, not everyone may receive two different offers, right? It depends on, your credit, your income, and how much equity you have in the property. But if it's over 25, then you will have to pay the recording cost. But if it's under 25,000, then you don't have to pay the recording cost. So that's one of the key differences. All right, let's go over some of the key data points. So again, the lines of credit go up to a maximum of 250,000. Now, one of the downsides I would say to the Aven card is that, let's say you have a lot more equity in your property. Let's say beyond 250,000, then you're not going to be able to access that. So with other types of home equity lines of credit or home equity loans, they go up to much higher amounts. As far as the interest rates are going to be variable. However, once you make a draw, then that rate is going to be fixed at the time of the draw. So think of it as kind of like a separate installment loan. That's one way to think about it. The minimum credit score is a 640. Now, from the data points I looked at, it seems like they're checking both Experian and Equifax. And the interesting thing about it, which I'll get to in just a second, is that they have automated underwriting, right? Automated underwriting. So this was interesting, and I'll put this up on the screen because when I initially went through this on my phone, it said that income was automatically verified through Experian and Equifax. Now, this is a game changer. And I say this all the time that in the future, a lot of these fintech organizations, lenders, and banks, they're not going to need to see copies of your pay stubs or even your bank statements because they're going to be able to verify your information automatically. And for those who aren't aware, Equifax actually owns something called the work number. So the work number is a aggregation of payroll data from the top payroll companies throughout the United States. And so there's a lot of fintech companies on the back end that have this information. They aggregate this information so they could verify your income. So this is going to be something to look out for in the future. The other thing about it, as I mentioned, there's 2% cash back. So you do get 2% cash back on what you use on the card. Now, here's the interesting thing. They have an automated valuation model. So this is how they come up with your home value. Now, one thing I will say about some of these automated valuation methods is that they're not always 100% accurate. And I'm actually going to explain why I believe it's actually somewhat understated as far as the home value. And I think they have to bake that in so that they're covered, so they're not giving you more value than what your home is actually worth. So they're actually discounting it to a degree. So as far as determining how much limit you qualify for, so obviously 250 is the max, but they have what's called a combined LTV, combined loan to value, and that has to be less than 89%. So the combined loan to value has to be less than 89%. So what does that mean? So basically, you take your home value, and the home value is going to be anchored by whatever value they come up with through the automated valuation methods, right? And again, they're probably already discounting the home value, but then they're also applying a combined loan to value 89%. Okay, so whatever the home value is, multiply that by 0.89, and that has to be greater than the first mortgage, if you have a first mortgage, plus the Aven line of credit limit, right? So let's just do some quick math right here. So you have a $500,000 home value times 0.89. So let's do the math real quick. Let's say you have 500,000 times 0.89. All right, so you get 445,000. And then let's say you have a $300,000 mortgage, right? Minus 300,000. And so then that leaves you with $145,000, right? But remember, it has to be the Aven line plus the mortgage has to be less right? So let's just subtract $500, right? So now you come to $144,500. So this is just illustrative. I think they're already sort of discounting the home value. And again, this is probably just to protect them. So I also wanted to let y'all know that Aven now is available in more states. Now, I know we've done videos previously over the past couple of years, but since then, they've actually expanded to a handful of states. As some of y'all know, I'm in Maryland, and Maryland seems to be one of the worst states when it comes to different credit product availability. They seem to be usually one of the last states to be able to offer different credit products, but I just wanted to let y'all know, so anyone in the DMV metro area, specifically Maryland, let's see what other states on. It seems like a lot of states this would be available in right now. And again, I'm not sure if it's all 50 states, but okay, Virginia, DC. Okay, so all my DMV people, you could definitely take advantage of it. Let me see. I don't think, did I see New York? Is New York? Okay, New Jersey. So no New York. And was California on the list? California is there. Okay, so most of the big states, Georgia, Florida, yeah. So, and I know a lot of subscribers are in these different states. So, yeah, I would say coverage overall is pretty good now. So, if you've been on the sidelines as far as the Aven Visa, you could definitely check it out. Again, not financial advice. Now, one of the benefits I can just add as far as, you know, home ownership, right? So, in order to qualify this, obviously a prerequisite is that you have to own a home. So if you're on title, right? Because they're going to be verifying on the back end if you're on title with the property that you list in the application. So you don't necessarily have to be on the mortgage, but if you're on the title, you could definitely qualify for this. And as I mentioned, they're also going to be looking at your credit. So 640 minimum credit score. And then you have to have some equity in the property, right? Because they're basing that limit based off of the equity that you have. So in a lot of cases, I think this is almost better than an unsecured type of product because the limit that you're getting is part of your equity, right? They're going to put a second lien on your property. So that's one other consideration. But I think as far as the speed and getting access to this is a lot more streamlined than just applying for a traditional home equity line of credit where you have to order an appraisal. The appraiser comes out, they look at the property, send the report back. There's different methodologies that are used when it comes to appraisal. So you have the cost basis, you also have the comparable sales. So those numbers can sometimes, you know, not be in alignment. So I think the fact that they're able to streamline this process where you can literally go from end to end with the application, get pre-approved, whatever limit that you get, they're not giving you the full equity, right? They're only giving you a certain portion of that. So you still have some left over. And I can confirm based off my experience with this, they're not giving you the full amount of equity. Now, the downside with the automated valuation methods is that usually it's not going to be 100% precise. And again, I believe they're actually discounting the value. So let's say you have a $500,000 home, that's the real value. They're probably only giving you $450,000. And then the 89% combined loan to value is going to be based off of a discounted home value. But it may not be such a bad thing because honestly, do you really want to be tapping into all of the equity in your home? Now, I know a lot of people have differences in opinions when it comes to renting versus owning, but this is one area where I could say is advantageous as far as owning properties is because over time, you will accumulate equity, and a product like the Aven Visa allows you to tap into the equity, and the process is streamlined so you can get quick access to the money. So anyways, I wanted to give you guys the data points on the Aven Visa card. If anyone else has experience using the Aven Visa card, definitely let us know your opinions right down below. And again, this is not financial advice. This is not a sponsored video. I just want to give you guys these data points. Anyways, let me know your questions, opinions in the comment section down below. And until next time, take it easy and we'll talk to you soon. Peace.